All right, what's going on, everybody? How are you guys doing? Welcome to FxProNow.com, where our goal of our company is to be able to help you to get to the point where you don't need any more signals, where you can become completely confident and grow your account over time by yourself. If you are that person that I'm speaking about, go ahead and click on the like button below so I know who you are. And if you would like to go a little bit further, go ahead and leave a comment with your name and a little bit about yourself so I can be able to go ahead and help you out personally. So what we're going to be talking about is a specific question that I've received, and that question is, when should I close out my trade, or should I close out my trade over the weekend? So specifically, should I close out my trade over the weekend? So I'm going to go a little bit. I don't know if I'm going to go too far in depth in this, but I'm going to show you in the charts whether it's a smart thing to do or whether it's something that isn't truly necessary. Well, I'm going to say it plain out for our specific trading style. I don't know if it's as necessary as one would probably say. And I'm going to go ahead and show you in the charts why I say that. So let's go ahead and go into the charts. So right now I'm in 4 specific trades, and most of the trades I've already shown you guys. I've been breaking them down as like step by step, essentially, right? And the first one is EUR USD that we're going to go over real quick. So when it comes to why people say it's probably best that you go ahead and close out your trade over the weekend, it's mostly because this thing called the gap, right? A gap between the close of one session for the weekend and the open of the next. All right. So what I'm going to do is I'm going to go to the H1 time frame, and the market just opened, right? It's Sunday over here when the market opens, right? And I will show you what I want you to do is look at the date all the way to the bottom. Look at the date and the time. Okay. So we're going to start over here. So look at the date. It says November 9th, November 8th, 2019. And it says 15, which is 3 o'clock, right? I don't know why it's 3 o'clock. But either way, for November 8th, 2019, right? And then I'm going to go ahead and shift over to here. Oh, okay, that's why. I'm like, what? All right, so this right here is the open of 4 o'clock, November 8th, right? And look where this candle closes. It closes at the bottom of the bearish candle. So it closes right there, right? And then the next one, as you can see, it goes to the 10th. So this is the weekend break. The next one actually opened up here, all right? So the last one closed down here, and this one opened here. So let's see what the difference in pips is, right? So the difference in pips is literally only 4 pips, all right? So you're probably wondering, oh, how did it jump if it's the weekend? I thought the market's closed. Well, yeah, it's closed to retail traders just like us, but it's still open for big banks and, I wouldn't be surprised big hedge fund companies as well, but and obviously governments, right? They're still transferring money throughout the weekend. So the money that you have in your banks, you think that your money's there. Your money's not there, right? Because of fractional reserve banking, they literally, let's say you have $1,000 in your bank, the bank only legally needs to have 10% of whatever that is in their actual bank holdings, okay? So they literally only need $100 of that $1,000 in their actual bank, okay? Everything else is in the ether, moving around. And what these banks are doing is they're transferring money from one bank to another bank overseas or whatever it is, over the weekend as well. So they're still moving the price. Although sometimes it moves a small amount like this, sometimes it moves, a good amount of pips, let's say 30 pips, which in our case isn't really that much, because we're talking about 300 pip moves, 100 pip moves, 200, 300, 1,000 pip moves. Those small changes in the markets from weekend to the start of the week isn't really going to be that significant for our style of trading. Now, if you are the style of trader where you're looking to be able to get in and get out on a day-to-day basis or hour-to-hour basis, then this is probably something that you won't want to do, stay in a trade over the weekend. But for our style of trading that we're particularly doing, probably it's not that, serious. So let's go to this one and let's see, okay, let's see, EU, it only had 5 pips below this one. Okay, this is a great case. So this is still the hour time frame, right? And you can see what they call the gap. You can be able to see it now. You can actually see the gap. So the market closed here, and then the market opened there. So let's see how big this gap is. All right, so it closed there and opened here, 30 pips, or 20 pips, right? So let's see how much I'm still up for this GU. So the market closed at 23 pips. So I'm still up 97 pips. So when the market closed, I was up. Well, now the market's here, so an extra 15. So, and 100 and I don't know, 10 or something like that, whatever, right? So, and then I opened, the market opened, let's just say with 90 pips. So I closed the week with that trade at 115, let's just say 110, and then I opened with 85. Big whoop, right? This is a 1,000 pip move. I'm not too stressed about that. If there's no breaks of structure, if there's nothing like that, I don't have anything to worry about. Let's look at AU. So if you ever look at the market and you see that type of stuff, now you know what that's from. You're like, what? Why is there that gap there? Here, let's look at when it here. So it closed here and then opened there. What is this? Right, 2 pips. Nothing crazy. Yeah, not even a pip, as you can see. Nothing crazy. For some traders, this is important. Close your trades over the weekend. Some traders hold it. If there's no breaks of structure, there's nothing you got to worry about at all. All right. If you're not too confident in your particular trade, you got nothing to worry about. Closed here, opened here, 25 pips as well. But I'm still up on GJ, 47 pips. As you can see, the market came right back to where it was. If anything, I'm up, 1 pip on this compared to where it was, where it opened. So up to your discretion. But I just wanted to go ahead and answer that question that somebody asked. So if there's another question that you have that you don't have somebody that could be able to give you a specific answer to, we're going to have this section as well where we're going to have a question and answer. You have a question, I'll answer it, right? So go ahead and put a comment below of the specific question that you have. It could be about, something about the chart, something about Forex, whatever it is. But I want you to ask me as many questions as possible, and I'm going to answer them. So go ahead and write a question right now. And understand, like, our goal is to be able to help people to get to the point where you don't need any more signals. You don't need no help. You can be able to start trading for your own, or for yourself. So if you know somebody that is also looking to be able to start trading for themselves, if anything, please help them by just clicking on the share button below and go ahead and just share it to them right now, right? There's a share button. Click on that share button. You can be able to just have it sent straight to the phone, or you can be able to copy a link and send it straight to the phone, and have them follow our journey. All right. So if you have any questions, again, go ahead and leave a comment below. All right, guys, greatly appreciate your time. And if you have not already, go ahead and click on that like button. It helps out the channel and it helps me out. All right. So greatly appreciate your time, guys. Peace.